Oh man, what if there was a tool that could tell me to be in or out of the market? What if there was a tool that could save me a whole bunch of money? Gee, what if there was a tool that could tell me are we in a bull or a bear market? But there is one, and you probably already have it on your charts. Be not afraid. After I show you the right way to use this tool, you will sleep tight like a little baby. So, after you subscribe to this channel, we will take a quick glance at our Crypto Fear and Greed Index and on the weekly chart of a total crypto market cap. Show you the tool that will erase all your doubts and show you the path of profitable future. Cryptosaurus roar. We are in the red. Our top 10 coins are covered in blood. But we are in this limbo for quite some time now. And this is the premise of the last few weeks. Redness in the sea of crypto. But fear not. For a few moments you will be reassured of our future. What is Crypto Fear and Greed Index saying? Let's find out. Well, the one is pointing us at 41. A state of fear in the market. And the fear is there for quite some time. Although last month we had extreme greed, now yesterday and last week we are in the fear, like the chart of this index will show us. If you haven't, certainly check out the video about our Crypto Fear and Greed Index and the multifactorial sentiment analysis of the crypto market, where we in detail talk about this and how you can use this chart and the whole sentiment analysis if you are an investor or a trader. Nothing has changed since that video, and we are still in this no man's land, let's call it like that. Flirting with fear of the people, but really hovering in neutral position. When things change, I will update you. For now, let's leave it like this and head to the main attraction of this video. Right for the thing that you clicked on, a crypto market analysis tool that will kill all your fears. Let's go. This is a weekly chart of a total market cap of all the cryptos combined. We could use any chart for this example, but since this is a very important and powerful tool, I want to use this market cap as our reference point. Now, what is this tool that we're talking about? I know that you know about this tool because it is so simple and so widely used that unless you lived under the rock in the trading community, you certainly heard about it. It's practically one of the few indicators that we already mentioned on this channel. So, are you ready? Ta-da! Yes, ladies and gentlemen. The almighty, the simple moving averages. As some of you might be saying right now, man, this Cryptosaurus is really a douchebag, jerking us around like some powerful trading tool is about to come. And then he pulls out the moving averages. Well, yes, that is the truth. Because moving averages are so simple, it's so powerful. And that is the real truth. Rest assured, this tool will show you the way. But for the start of this presentation, first we have to go back. Not back to the future, but back to the past. To see the signals that we already had and how it played out. I think this is enough of the price history. We have gone all the way to the 2015. Now, in this case of this strategy, we are talking about few conditions. First, what indicators are those? This is 20-week moving average, 50-week moving average, 100 week moving average, and the 200 week moving average, respectively. Okay, now that we know exactly what are the moving averages we're talking about, this is the main premise of the game. You should be in the market when those moving averages are aligned the right way. And this is the premise. On the top should always be the price action of any asset that you are watching. Below the price section should be 20-week moving average, not 50, not 100, not 200. 20-week moving average. Below the 20-week should be 50, below the 50, 100, and below the 100, 200. And that is the time when you should be in the market. If any of these conditions aren't met, you should not be playing the game. Okay, now that we have the requirements, where did we get this signal? Well, let's go from the beginning. How about here, when the price got above the 20-week moving averages? It's above the 20-week and the 50-week. And from this point, above every moving average. But no, ladies and gentlemen, we don't have a signal yet. Why? The price is above the moving average, but the alignment is not right. Because if you look closely, what moving average is below the price on this conjunction? It's the 100, not the 20-week. It's the 100-week moving average. And what moving average should be below the price? Just one, 20-week moving average. Okay, is this the time to get in? Nope. Why? Why not again? Because of this moving average that at this time, that is 50-week moving average. Yes, the price is above 20 and the 100, but the alignment is still not right. The 50-week moving average is below the 100-week moving average. This is not the case. This is not what we want to see. What about here, when the 50-week breaches 100-week? Now we're talking about something. Yes, this is the time when you should get in the market. And why? Simple. 1. Price above moving average. Second is the 20-week. Third, 50-week. Fourth, 100-week. And let's assume that this 200-week was something like this. And of course, 200 is below all of this action. This is a signal. So this is a no-no. This is also a no-no. But this guy here is a thumbs up. This is our entry point, and this is when your money should be in the market. Where do we exit? Where on the first occurrence of different alignment of these requirements. Our first occurrence was here. And what happened there? Well, the price breached the 20-week moving average. We gone below it. So the alignment is not there anymore. As you can see, on this occasion, we bounce from it. On this occasion, we bounce from it. And on many other, we ride those waves, let's say it. We were in the market full time. So this is our exit point. If you want to be rest assured that your signal was not a bad signal, a fake signal, when will be your final exit point? Well, at this cross of the 50-week and the 20-week moving average. At this time, we lost a complete structure of this strategy, because the price is below the 50 and the 20, and the 20 crossed below the 50. Ladies and gentlemen, I present you the start of a bear market. So, one more time, we will enter around this point. We will exit around this point, and we would ride this way all the way. And the gains would be humongous. You would be a very profitable trader or investor. What's the holding period? Well, about 100 weeks, 700 days approximately. Well, that's almost a 2-year period, so a lot of patience is required for this strategy. But without no pain, there is no gain, believe me. What's happening after this exit point? After we exited our position, where would we enter again? This whole time we would be out of the market, and that is the beauty of this strategy, because for about 2.5 years you would not be in the market. Why? Pick any time and see for yourself. Did we have the alignment that we had in our bull run of 2017? No, not at one point is the alignment of the price and the moving averages in the right way until the recent discoveries. So this whole area is a no-no. Okay, so I'm telling you, and I'm asking you now, why should you be fearful if you have the signal? Or let's put it the other way, if you don't have the signal, you would be out of the market. Your money would be safe in the bank or somewhere. Okay, now that we bashed this bear market and told you not to get in, when did we finally get in? Let's delete all this and show you the magnificent entry point for our tactic. There you go, ladies and gentlemen. This is the first time after the 2.5 years that we would enter the markets. Why? We have price above the moving averages. For the first time we have 20 week, 50 week, 100 week and the 200 week moving averages below us in the right conditions. So we are somewhere in the 2016 on the previous cycle. So I'm asking you now, why would you be fearful? Because we just get one of the most reliable signals in the history of crypto to get in the market. No time to fear, no time to panic. It's all good. We will have dips on our journey to the moon. We will have some big corrections. And the fear will be all around you, in the traders, in the investors. You should not be panicking. I now gave you the answer why. So, should you be in the market right now? First of all, I'm not a financial advisor. Do with your own money what you want to do. You are responsible for your own decisions. But, hey, is this signal a good enough signal for you? You decide. The chart has spoken. Do you know what I'm seeing on these charts right now? And this is my final note. I will leave you with this on the chart. You decide what it will become. Overall, fear be gone. And also, check out my other videos that I'm suggesting to you, because you never know what valuable piece of information is waiting for you.